Hi everybody, this is the Sentiment Timing weekly video update for January 28th. I hope you guys are managing these very fast moving markets, and what we want to go over tonight is how we got here and where we are right now. So let's start out with, this is our January 7th 2015 report. And what we were looking for was eventually down into the January 15th time period. And that weekend has minor crash potential, but should resolve into a very tradable low. Now, what was also mentioned in that same report was that once the S&P found its low, that some potential targets would be 2950 for the S&P, all the way up to the 2060 if the bulls got above those levels. So if we take a look at the chart here, this was the January 15th time period. We made the low and we made it right up to our targets. Now this is where things got a little bit tricky because it made it up so fast it didn't get into our potential time periods for expecting a top. So what it did is open the door for choppy trading, and instead we got a very, very sharp move to the downside. So we're not here to guess whether this is the top or not. What we want is we're just looking for high probability trade situations, and that happens when we're at a particular time period to expect a turn, and these red dots are exactly what they were. And we're not there, but we hit a price target. So this is what made things a little bit tricky, and from there we had a big drop down from that. So if we move on and go to our January 21st newsletter, what we were saying was that there's a Greek vote on the Sunday to beware of, and that you still want to take this as a scalpy market. In other words, there may not be that much air in the markets, which fits the choppy upside potential. And from that, we had this big move up, and from there we'll right back down again. So we're in the choppy environment that was anticipated, and it wasn't going to be one of these runaway train moves, and that is pretty much what it is. So we're still not in that high probability trade in either direction, because if we get a bounce and it comes into our potential turn period that we're expecting a top, then the probabilities increased for a short position. And really what we would be looking at is, this is in our January 26th, is that this trading low was best understood as a pause before another technical decline. So if we get the bounce up into our potential turn time period, it's going to set up a very good shorting opportunity, and from there this would be the pause before the next decline. Now again, this was mentioned in January 26th, and we already know the actual time periods that we're anticipating the top to hit, whether it hit or not, and we're just going to get a reflex bounce into that, or we already made the top. The market's going to be right on this. We don't have to fight it. What we do know is that this was just a pause before another decline. Now, the FOMC meeting on the 28th, which was today, was supposed to keep the markets in check, meaning again that we weren't going to get one of these runaway moves, and sure enough, we got to bounce back up to our bull bear line, and then from there we saw the bears take over. So what is important is not to try and force a trade or have a let's say an understanding of the market when sometimes there's not. You want to get in trades that you have high probability situations, and that is when we're at a turn period and we're at resistance and we get these big drops. When you hit resistance but yet we don't have our red turn period yet, things get a little bit choppy, and what you do is you stand aside and you have a neutral stand on the market. And that's pretty much what we've been saying, is that you want to be neutral. You don't want the market doesn't have to go up into our turn date, but right now there's potential that it could bounce and it would make sense. So if things are cloudy, and what you do with that is you stay neutral. You let things play out and you wait for, once we get into that time period, that's most likely when we're going to see momentum pick up into the downside. So that's really what we've been relaying our message to our subscribers. If you're interested in learning these exact dates, because we also know when the low is supposed to occur once we start that expected drop. We have our weekly special, and it is for $199.99 for the first 2 months. That is about $100 savings off our regular rate. Now, as always, we have a time period on this, and is some of the emails that I get all the time, yes, we remove them. So this one is for 24 hours. We may keep it a little bit longer, but right now that is the minimum we're keeping it open for. So if you're interested in reading one of the best market timers in the world and know when the next turn is going to be coming, you can join us now. With that, have a great night, and we'll see you guys next week.